$90 a barrel, partly because of all that wild trading.
But gold is really up. It's higher by about $9.10, but perhaps not by as much as some people might expect after a market sell-off and a big rate cut. Back now to discuss all of it is our Fox panel, and I've got to go right to Peter Schiff, who's a big gold bull here. Gold is reacting certainly by moving higher, Peter, but is it the jump that you would have expected at this point?
Well, you know, gold had a big run. Gold is up today. It's very strong against the Dow Jones. You know, the Dow is now at 13.5 ounces of gold. This is a new low for the Dow priced in gold, which, of course, is the best way to value it. And, you know, what the Fed did today with this rate cut is very bullish for gold and oil because, you know, by making the dollar less valuable, by reducing the value of our money, prices of commodities have to rise to compensate for that loss of value. So, you know, people should be buying this dip in oil, buying this little bit of a dip in gold from the highs, and we're going to make new highs in both.
You agree, Eric?
Well, gold is very interesting. Gold is shrugging off everything. Usually gold kind of goes with oil. They kind of run together. They're a commodity basket. There's a lot of commodity hedge funds that run them exactly the same. So what gold is doing is it's putting in another buying up. It's actually trading higher with oil trading as much as $4 lower this morning. Now, why is that? He's right. The dollar gets weaker. Typically, commodities go up. Oil's going down because if global growth slows down, the perception is that demand for oil will continue to shrink a little bit and put downward pressure on prices. Gold is shrugging off everything. Gold is going up in light of all the economic news, in light of all the slowdown. Gold is a buy. I completely agree on the gold. I'm not so sure oil's a buy here. I think it's got a little bit of room to the downside, maybe a $75 or $80 barrel first.
You know, here's the thing. I think on the global slowdown, I don't think you're going to see a real global slowdown. You're going to see a collapse in the U.S. You're going to see a big recession here. But the world still thinks that they're going to catch our cold. That's not going to happen. In fact, what's going to happen is consumption that used to take place in America is going to take place in other countries, principally in Asia. So instead of manufacturing goods and shipping them here, they're going to manufacture goods and keep them for themselves. So all the production is going to continue. All that's going to change is who enjoys the consumer goods that get produced.
Liz,
it's going to be the rest of the world and not Americans.
There was a time when gold wasn't doing that well, Liz.
Right. Back in the 70s, gold was trading around $35 an ounce, and when the dollar got ripped off its gold moorings, that's when you saw, you know, gold really start to spike higher. Gold, yeah, it's going to continue to go higher, I think, because of worldwide demand in places like India and China, where you have new income classes, burgeoning middle class, wanting more jewelry, and you know, it's asset inflation. Asset inflation. Many dollars, too much currency chasing too few assets. Goldman Sachs, interesting study, came out and said that look, you got to look at the countries overseas and emerging markets gunning the printing presses. On money supply up about 21%.
What do you think we're doing?
Hang on a second. In China and India, and in Russia, because those central bankers are more prone to political pressures, because of the powers that be who want to hold a tight, crowd-like grip on power, get more sway over central bankers. That's the issue here in the United States as well. It is a concern about inflation.
Gary Calbaum, how does all of this talk affect the guy in the street? He's got dollars in his pocket. He doesn't have gold. He doesn't have euros. How does that affect his ability to buy things?
Well, prices for everything are going up. Everything they buy, they're paying more money for. Look, everybody is correct here. There's an absolute direct correlation between the bottom dropping out on our dollar and commodities continue to go up because oil is based in dollars, and people want return. When they see the dollars down, oil prices go up. And I got to tell you, I don't see this stopping at this point in time. The Fed continues to rain money into the economy, and as long as they continue to do that, you're going to see gold higher, oil higher, and the rest.
You know, he makes an interesting point. We are on new ground right now. Prior recessions were triggered by oil supply problems. We are in a demand scenario for oil. Oil is very hard to find now. You had to drill in offshore in deep water. Kazakhstan, places like that, are wringing more royalty payments and getting their cut out of oil companies. So oil, the thing is, OPEC last fall, the debate was, why doesn't OPEC, up supply to wring that speculation out of the market and bring oil prices
let me
down.
say something.
Even the oil minister
Go ahead.
is saying there's too much speculation in
No,
oil.
Peter, let's let Victoria Barrett get in on this conversation. Victoria.
Half of the price of oil right now is really a currency issue, not a demand or supply issue. That's where the problem is. So if you are worried about your prices at the pump going up and you're worried about everything, the cost of everything going up,
Eric,
with
the
the dollar
trader.
falling, investing in gold, investing in oil
do you know how much
is
the
a
dollar,
good way to play this.
Do you know how much the dollar has slid in the last 18 months? About 12%. Oil is up 100% since January 16th of last year.
The reason for
all
that,
the dollar. Stop blaming the dollar.
The price of oil in gold has not changed.
Abroad.
Excuse me. The price of oil in gold has not changed. It has remained
Peter,
the same.
Everything
is
not
inflation.
traded in gold. They're traded in dollars.
No, Gold is money. Central bankers are debasing their money. They're creating inflation. That's where all the demand is coming from. Countries around the world are printing money. Money is losing value. Gold is real money. Gold is not losing value.
I'm not disagreeing
Oil is
with
not
your
going up.
demand picture for gold,
Eric.
but one of the biggest things that no one's talking about is the investment demand for gold. People are using gold as an investment device, and that's where the buying pressure is coming from.
Gold is money.
And I want to go back
gold is money.
Peter,
Gary,
hold on.
go ahead.
I just want to go back to an important point. I've been using the word credibility very often the last few weeks. You had a Fed, Ben Bernanke, on the Hill last week saying he's not worried about inflation. He thinks it's going to moderate. Obviously, he is not going shopping at stores. He's not putting gas in his tank, and he's not looking at the price of gold. And if there's any wonder that the markets are reacting poorly, it's to that type of talk.
Hey, but check this out. You got to watch out with inflation happening in places like Saudi Arabia, where they are saying depeg the currencies
and that's
from the
got to be
dollar.
the last word.